Investment Officer, Maelstrom, and the co-founder of BitMEX, Arthur Hayes, joins us. Hello.
Hi.
Nice to see you IRL.
Yeah.
Yeah. All right, we got to talk about this excitement. You just brought a lot of energy to the desk. We're here at Korea Blockchain Week. I mean, talk to us about what you hope the audience who's watching this learns about Asia and crypto.
I mean, this is the most active crypto trading market in the world by any country, even per capita, right? It's crazy. So, and it has been that way for a very long time, which is why I've been coming to Korea for crypto since 2014. So I love this place. I love Seoul. I live in the region. I've been here many, many times.
We've talked a little bit about it, but I would love to hear it from your perspective. You've been coming to Korea since 2014. Talk to us about the trading culture here, the retail trading culture here. What is it that makes it such a dynamic market for crypto trading?
So, number one thing, it's a very highly educated market. Number two, which is actually not the best statistic, is that they're overeducated in terms of there's not as much opportunity for all these very intelligent people. It's extremely expensive to live in Seoul and be successful, and all of the best jobs are controlled by 4, 5, 6, 7 families who run these chaebols, the Samsungs, Hyundais of the world, LG. And so you have this population that wants to escape this depressing, crushing rat race that is like Korean society in this megapolis. And so crypto and the internet have been one of those things, whether it's been gaming, and now it's stock trading, right? So, I used to come from TradFi, and back in the day, Kospi options were the most liquid market in the world. It's a city of 20 million people trades more options than anyone else in the world, until the regulators essentially just banned it because, they have days off of the market when Korean university students have exams. That's how much of the retail is into trading to sort of get a leg up in their life, because it's just so hard to succeed in this society where there's not that much opportunity given all these very, very smart and educated people. And so when crypto comes along, where it's a flat ecosystem, anyone can build anything. And if you're smart and ambitious, you can become a Do Kwon. Obviously, he's probably not the best person to say that. We are SY from Story, right? Of these leading figures in crypto have done so well. And there's so much activity. And if people believe that they study more, if they're smarter, they can crack the code of the markets. And in this 24/7 market, they can trade their way out of being in a basement like in Parasite, right?
Yeah.
So,
Arthur, I want to switch gears a little bit. I know you just got off stage. I believe you were predicting Trump was going to take control of the Fed in the first half of 2026. I'm just interested in your take right now of what's happening on the U.S. side of crypto.
I mean, at the end of the day, it's about making sure that the right people in TradFi make enough money on this Bitcoin crypto boom, this bubble that they're going to blow by pumping up the credit, right? So they want to make sure that people are paying their taxes, they're buying their real estate, they're going to the club, they're going to the restaurants. The investment bankers are making 5% doing DAT deals. The lawyers are charging $2,000 an hour to make opinions. Like, everybody's making money in crypto because it's this bull market, and it's going to help sort of revitalize the government finances. So that, I think, is why Trump wants crypto to do well.
And so what does that mean? I mean, what are you predicting? First half of 2026, that happens. Where does Bitcoin go?
I mean, I still believe that Bitcoin could be 250,000 by the end of the year. And my North Star is 2028, end of 2028, when Trump and his cronies leave office, that, in their wake, Bitcoin could be in the $1 million plus range because of all the money that they printed between now and the end of their term.
We're at the end of September. The end of the year is coming really soon, and we're not close to 250,000. What has to happen?
Come on, guys.
Arthur, I couldn't help but ask you about yesterday's conversation on Twitter about Hype, Hyperliquid. You and Maelstrom got out of your position. You talked about all of these token unlocks being really deflationary on the opportunities for, I guess, retail. Can you just break down your thesis about this?
So number one, I got on stage in Tokyo and I wrote a very good essay about stable coins and how Hype has the potential to go 120x, 26x. Now the key point here is by 2028. We are in 2025 right now. And a lot of things can happen between now and then. And as a chief investment officer of a fucking hedge fund, I go long and I go short, even though I might have a conviction on the long-term state of play. And so right now in the short term, we have an issue where Hyperliquid is facing it's Chinafication moment, where they're going to have competitors who've seen a successful business model, and they're going to say, okay, great. Now I'm going to take your price down to zero and see how you survive, right? And so we have Lighter, zero fee trading in some sort of era. We have Aster, maybe or maybe not. It's backed by CZ. I have no fucking idea. And they're doing low or no fee trading. And so when you have Hyperliquid, I think they charge like something like 3.5 or 4 basis points, whatever it is. And they have this massive potential sell pressure coming starting in November. We don't know how many of the developers are going to sell, if at all. But if I'm going to think about the model, I'm going to say, well, okay, do I believe that Hype has the moat in terms of revenues to make enough money so that they buy back enough Hype tokens where this doesn't matter? And before, this weekend when I pulled up the DeFi Llama leaderboard and I saw that Lighter was number 2 and Aster number 3, both doing, $2, $3, $4 billion ADV days, and Hype was only about 4.5 billion. I'm like, okay, well, this isn't good. I need Hype to make money. Because when Hype makes money, then they buy Hype, and then I don't care about the unlock. But if there are these people that are going to say, I'm going to go and pull we only care, we'll make it up in volume in the back end. I'm going to go zero fee trading, see if I can get all your users, vampire squid attack you, do an airdrop so that people can do another 10, 20x on their airdrop. Then I'm worried that Hype might not have enough money to buy back enough tokens to offset this potential negative drag on the very publicly known unlock schedule. And I said, okay, cool, I'm going to exit. If Hype goes from 50 to 100 and I'm wrong, great. Still think it's going to 5,000 in 2 years. If Hype goes from 50 to 25 and I'm right, great. Now I get to buy back at 25 and I get some extra use in my returns. And so that's why I'm thinking as a fund manager in terms of the probabilistic outcome and what's my best expected value decision. And that's why we sold.
When you're thinking as a fund manager, and I want to just get your perspective on digital asset treasuries. I mean, there are digital asset treasuries being built around Hype, but around so many other tokens. When you're thinking as a fund manager, how much is this digital asset narrative coming into your evaluations of assets?
I obviously am an advisor of UPXI. We have done a Maelstrom. I've done a few pipes. We've also traded a few in the secondary market. And it's a very tough market because obviously if you buy into the pipe, it takes you about 3 months to get your shares. It's very public when the unlock happens. And, this talk might pump, whatever it does. And then it's going to come back down to reality because everyone recognizes that the pipe investors are going to sell their shares, which we did as soon as we got them. And so it's a momentum-based strategy that's very beta to crypto. So, but as a fund manager, like, okay, if I believe that Bitcoin and ETH are going up, or the market's going up, what's the fastest horse I can ride and I can get off the easiest? Like these DAT deals, yes, they can pump real quick, but for whatever reason, if the sentiment changes while I'm asleep in New York overnight, this shit can be down 75%, like knock on some of these other deals. And all of a sudden, all this money that I saw on paper is evaporated while I'm sleeping. So I don't like trading these things because that's just not the type of thing that I want to trade. It's a hot potato. There's a structural reason why they exist. There'll be, a few winners, a few micro strategies in each different token category. I hope UPXI is one of them. But at the end of the day, from a trading perspective, they're very difficult to trade. It takes a different type of mentality and a different type of frequency trader that's not me or any other traders or fund managers at Maelstrom. And so we tend not to get too involved in putting a lot of money in these DAT deals on the secondary market. We've done a few pipes. We make 10, 20% on our money in a few months. Okay, that's fair. But again, I'm not really enthusiastic because of the way our fund is set up and to trade these things.
All right, we got to wrap it there, Arthur. But I got to end at this. A little birdie told me that you like to spend your Februaries on the ski hills in Japan, but that's also when consensus is. So wondering if you might give up skiing for consensus next year.
Highly unlikely.
Okay, well, I had to try.
We're going to keep asking.
Arthur, thank you so much for joining us. It was a pleasure.
Thanks for having me.